Hello, Mike Swanson of WallStreetWindow.com here. I run this website, and if you don't know who I am, I've been trading in the markets now for well over 20 years, and I'm doing a series of videos right now to go over with you some of the key lessons I learned from my experiences. I started out as a day trader, then I went on to co-manage a hedge fund for a couple years, and now I run this website and share my ideas on that with people. And what I want to do is go back from the beginning and show you some key things that got me started that you can apply yourself with what you're doing in the financial markets. So as I said, I started out in the 1990s. I was going to college in the graduate program at the University of Virginia. I had a master's degree in history, and I was in a doctoral program for history, but I wasn't really sure if I wanted to do that for the rest of my life and become a college professor. I wanted, I guess you could say, some more excitement and risk-taking, and I got enticed into trading. I inherited about $15,000. That's how I started out, and then I went to the bookstore and bought a dozen or so books, classics, the Benjamin Graham, classics on technical analysis, and just devoured them and read them and just kind of started watching what the markets were doing. And the markets back then were just a wild situation because there are all these internet stocks that were going up like crazy. Every single day there'd be an internet stock doubling. Oftentimes a dozen of them doing it, and that type of action entices people into the market. So there are tens of thousands of people like me day trading. It's kind of like the cryptocurrency mania of 2017. The rise in Bitcoin, the bubble in Bitcoin, brought a lot of new people into that market for the very first time, didn't really know what they were doing, trading for the very first time, opening up an account for the very first time, and that was me back then, experiencing the markets for the very first time. Now, despite reading all these books and advocating do this, do that, do that, I read a magazine article in Business Week about an internet stock that was going to have a news development within a couple weeks that I thought would make the stock price explode in value. And if I could get ahead of the news, I can make some big money. So what did I do? Forget about Warren Buffett, forget about Benjamin Graham. I put $15,000 into this one stock. I wanted to take a gamble. And what happened? Well, the stock went up. It went up and up and up. Well over $30. I bought it at 18 and it went over 40. I think it went to 50. I didn't sell it at 50, but I got up to doubling my money, a little bit more. So let's say I had 35,000 in my account, a huge gain, and I never made that kind of money in my life before that point in that fast amount of time. Certainly, over the course of a year, I wasn't making that kind of money at that moment. So it was incredible. And you young like that and you make that kind of return, you're going to try to do it again. You are very easily going to get addicted to the market and the action, and that's what happened to me. So one good thing happened though is when I got out of the stock crashed, and that taught me a key lesson that hey, these internet stocks, they're crazy and they crash too. And most of them actually did crash and go to zero, go and vanish and disappear. So I wasn't a believer in the stocks and the stories behind them. And that made me think, hey, I want to trade where the action is. It's in these stocks, but I don't believe in the stocks. So charts, technical analysis, that became my main focus. The price action. But I wanted to make the big return again. And I was watching stocks that would move the most in a single day, and I would buy them and hope they would go up the next day big, and sometimes they would, sometimes they wouldn't. But the strategy was very faulty. It was really not a strategy at all. It was really pure gambling. And it was exciting. You watch the gyrations in your account. But as time went on, and it didn't take very much time, about 8 months, I turned that 35, perhaps close to 40,000, into around 10. In other words, I lost money. I got down to where I started out at, and then started losing a little bit more, got down to about $10,000. And those losses were a warning sign to me that, hey, you don't really know what you're doing. You're gambling. And I had a couple choices at that moment. Continue what I was doing, which I'd probably bust out and have a sad story to tell, or admit I was doing this and making a mess out of my account, not knowing what I was doing, and I wasn't going to be another one of these people with a sad story if I took responsibility for what I was doing and stopped and looked to do something that actually worked and took what I was doing seriously. So that's what I did. I stopped trading. I looked back at all the trades I did. I looked back at various stocks, what they were doing, what were the top gainers really doing, what was really going on. And I searched for what I needed to get out of the situation, which is very simple. I needed to find a pattern in the market that was repeating, that could give me the best potential reward, the least amount of risk, if I wanted to get my account back up and move forward, which I really wanted to do. The potential of freedom that you can have from the markets, you can't get it anywhere else. So I found a pattern. It was a simple pattern. It's a pattern of a stock doubling in price or more over a short amount of time, and then pausing for about 15 days, in which it was going sideways in a consolidation pattern, and then going on the verge of breaking out again, and then I would buy it, and these stocks, this was towards the end of 1999, would take off. And I would just, a day or two later, just get out and try to do it again. Well, here's what happened. I didn't put all my money in one trade again. I had come to learn that was dangerous, but I put like half the money in a trade, which is still too much, but that's what I did anyway. And within a very short amount of time, about a week, I got back up to 15,000. Boom, next thing I know, I'm at 20. Boom, next thing I know, I'm at 30. I got my account back to where I wanted to go. I was turning around by using this simple trading pattern. Now, by the end of the year 2000, even though the NASDAQ topped out that March, had a terrible plunge in April, the whole stock market as a whole rolled over into bear market that fall, I turned, by the end of the year, I had about 80,000 from trading. No more deposits, just all trading profits. It's about where I ended the year up. Over the course of the next year, I had over 100, and this was during some of the worst stock market action ever as far as declines go. It was a horrible bear market. The technology bubble was blowing up, and it was a disaster for people who got fooled into believing in it, which is what happens in bubbles. But what got me going is what's important. It's finding a pattern in the markets that repeats and can give you the best reward for the least amount of risk. Now, that pattern of just looking for something that doubles and pauses just by itself doesn't, I've refined it. It's not really, I'm not recommending you just go out and buy something that doubles and pauses. But the basic idea is completely sound when it's done at the right moment in an overall long-term trend. And there's a moment in the long-term trend when the pattern is incredible. And if you use it with individual stocks and combine it with some fundamental metrics, it can really be it just improves it even more. So I call that combination setup, which is the most consistent trading setup I've ever used in all the years of trading and investing, the two-fold formula. If you want all the details on it, just go below this video and grab my book on it. It's a PDF book with examples and updated for this year even. And if you really want to get more involved in what I'm doing, grab the bonus. It's optional, but it can really get you going because it'll give you access to my real positions. And you'll see when I'm buying and when I'm selling in my Power Investor service. But go below and click for the details on the book and the bonuses, optional bonuses, and I'll be talking with you later.